Welcome to the Kelowna Real Estate Podcast with your host, award-winning realtor Matt Glenn, and top-producing mortgage broker Taylor Atkinson. Professionals in the industry, enthusiastic entrepreneurs, and successful investors. When it comes to real estate, we're all in.
Okay, Matt. Throne speech came out recently from BC government. Some pretty exciting information. One very valuable piece of information, and I mean like monetary value, which is potentially saving one of my clients over $12,000.
This is why you got to hire Taylor, man. He does ideas like this. Just listen to this crazy
And just
craziness.
to be clear, you don't actually have to hire me. I'm free. The banks pay for me.
No, dude, I think it sounds better when I hire you. That means I have my own posse.
Right. Yeah.
You know, so.
Yeah. I'm going to send you an invoice. So yeah, the property transfer tax exemption, which has been an absolute thorn in my side when you're talking first-time home buyers, because the limit was $500,000. Now, like in Kelowna, there's not a lot of houses. Like, yeah, first-time home buyers are getting into the market, but it just pushed a lot of people over that threshold, and then they had to pay property transfer tax.
And like it had a sliding scale to 525, which was completely useless.
Yeah, it needed to be revamped. So I'm glad it is.
Yeah,
so now they've increased that to $835,000. Which allows a lot more people, specifically in the Okanagan region, to get that grant for that exemption. So I have a client right now, property under contract, everything's firm, we're broker complete, instructions are ready to be sent to the lawyer, but we're going to see if we can push back closing by an extra couple of weeks because it's closing in March. And if we close April 1st or onwards, they're going to save $12,700 in property transfer tax. And that's not an expense that just gets added to the mortgage like CMHC fees. It is directly out of your pocket time of closing.
You pay it on closing.
Yeah. If you are closing on a property in the next couple months, ideally it's in April, it's going to be a pretty rare occasion that you'd be able to push closing back a couple months because the person you're buying from is probably moving or needs those funds. But in this instance, it's currently a rental property. So we're able to push that back and save a bunch of money.
Like it's only for first-time home buyers buying in a certain.
Yeah.
So not every deal has to push back, but yeah, you save them. Now they have over $12,000 to spend on renovations instead of tax.
Yeah.
So good for you.
Yeah.
Yeah.
Other things that are positive in the market, inflation report, Matt, you were reading that?
Well, first, hold on. Let's go talk about the anti-flipping tax. So house flipping in BC is, I'd say, pretty much dead. With 20% to sell in 1 year.
Yeah.
Or up to 2 years with the sliding scale. So, but interestingly, there are some exceptions, and that is if you add a basement suite, I assume it has to be a legal basement suite, or a carriage house, which I've always thought is ideal. If you go find like a 2-story house and you buy it and renovate the whole thing, you add a legal suite into there, you make them top nicer. Like I always thought that was a play anyway, to try and get the most value add into a property. And then also kind of the safest exit strategy too, because now you have a rental property at the end if you can't sell it. So I always thought that was a play anyway. And then I got this. I think people are going to be taking advantage of the legal suite thing. What do you think?
I like it. I don't know if it would incentivize people to make that large of an investment. Like it definitely helps, but I don't know if it'd be the deciding factor. Would it? Like it's still going to cost a ton of money.
Like to do a flip at all?
Well, to add a suite. Is that going to be the one piece that changes if someone's going to do it or not? I don't know. I think it's a good legislation.
Oh yeah, not everyone for sure. I think flipping is effectively not a thing unless you specialize in adding legal suites.
Yeah.
Just always thought that was a good,
that's a good point. Like maybe now, professionals are going to add more suites, but I don't love restricting flipping because like it's a service that's needed. There's a lot of rundown houses and people want a nicer place to live in and they don't want to take the headache, buy it and then renovate it and have nowhere to live in the meantime. So I don't love the government intervention on that one.
Honestly, I agree with you. I always thought it was not a bad thing. Like obviously the lipstick ones and the shitty things that you hear about people flipping a house and it's just absolutely garbage job and they up the price by $150,000 or whatever they do. Like I always thought that was obviously a little suspect, but people that go in and do a really nice renovation, making the houses nicer in the street, like they are increasing the value of the house, but the house is just worth more because it's a nicer house. Yeah. So I agree with you. I kind of like when people did it right. There's also the issue with people just like buying a house and not doing anything with it, like just buying it and selling it as is.
Yeah. Yeah.
Few months later, like that's
like speculating on it for sure.
Yeah.
And I guess maybe it also limits that strategy if like an investor is going to buy and try and kick out the tenant based on a renovation and then sell. But I don't know. Yeah, I don't love that rule so much. And I don't think there's any massive companies. Like, who is going around and buying hundreds of single family houses to flip them? I don't think it's that prevalent.
I don't know. What if they are? Like, do they need an agent?
Yeah.
That is funny. So also we have this inflation report, 2.9%. We're now under 3%, which is ticking close to lowering interest rates.
Yeah.
Right. Like, I've heard more and more talk coming down in the spring. I don't know if I'm totally on that train yet, but like, it also hasn't left the station, man. So it could happen in the spring, but I think it's in the summer.
I'm loving your analogies
Almost
today. You're killing it. Yeah. I still think it's probably going to be the summer. The bond market's actually picked up a little bit from the data from the States about 10 days ago.
Yeah.
But it is a very good sign for not a good sign for our economy, but it's a good sign for our balanced market, if you want to say that.
I also noticed that since that inflation report came out, gas prices have actually went up, which will affect the inflation thing. So yeah, maybe a little too soon, but it's good news. It's heading in the right direction.
Yeah.
So that's kind of nice.
Yeah.
One other thing, watching the news this morning, global news, I saw on the ticker going across the screen, a colossally high number of Canadians plan to buy a home within a year. Saw that, didn't really see any context. I was like, man, I got to check this out. So I Googled it, went to the old Google machine, went to global, figured it out. Here's what it says. So with Canada's housing market starting to turn a corner, there is a growing demand for home ownership with a colossally high number of people planning to buy a home within the next year, according to a new poll. Almost half, 49% of people surveyed last month said that they plan to purchase a home within the next 5 years. That percentage is up from a year ago when it was only 43% expressed the same intent. Over the next 12 months, about 1 in 10, 11%, or 4.4 million Canadians plan to buy a home, which is still a colossally high number, given that the greatest number of homes ever sold in a single year in Canada was 700,000. So 4.4 million people in Canada say they want to buy a home this year, and the highest number we've ever sold is 700,000. So obviously not 4.4 million people are going to buy a home, but what if a quarter of those people do? That's over a million. That's 1.1 million people. Or what if 20% do? I don't know what the math is on that, but it's equaling the highest number of homes ever sold.
Yeah.
So this could be a good year for turnover, at least. Well, I don't know what the price is or what that means, but with the interest rates coming down, this could be a good year.
Yeah, I mean, in terms of like our sales revenue, for sure, I think it's going to be a good year. In terms of like what the government's trying to do, affordable housing, I think this is going to counter that. Some very interesting
Well, the
stats.
number of sales, I guess, more people buying, supply and demand, but if people moving, doesn't really.
Well, yeah, it's tough to see the transparency in that data because we have had the largest growth of our population, largest immigration. Yeah. Most of those people need to find somewhere to live, whether they're going to buy or rent. And then the renter that's moving out of that tenanted property is then going to buy. So I think that's adding a lot to it. And I've seen some charts recently that like the amount we're building is historically the highest we have ever produced in Canada. Like hundreds of thousands of our projects are currently in place, building permits, like everyone's trying to do their best to build, but we can't keep up with the demand because we have this massive influx of people that are buying. So it kind of, corresponds with your data there.
I honestly think there's a massive opportunity in Kelowna to buy a condo this year.
Yeah.
I've been saying this. Condo prices are going to come down in the next few months. Like it's almost a certainty with these certain short-term rental things. Yeah. But they're not going to stay down, right? So they're going to come down. Our interest rates are going to come down. There is an opportunity to go buy a condo. I would say mid-range condo. So I'm talking about one that's like kind of $600,000 to $1 million. I think you're going to get the best deals on those condos in the next 6 months until the fall. I think there's an opportunity.
If you are a first-time home buyer, you should be looking at a decent condo. There are going to be sales, and you get your property transfer tax waived now that the threshold is high enough. Like there is a huge opportunity.
Yeah. And property transfer tax on new builds, I think it's up to 1.1. Don't quote me for sure, but it's definitely $1 million, but I think it's 1.1 where you don't have to pay property transfer tax on new builds if you're a first time home buyer.
Don't quote us on anything.
Well, you can quote me on this. That is a good year to buy a condo in Kelowna. I'm telling you.
Yeah, you heard it here first. Yeah, talking about like a national kind of figure, like some of the stats we've been speaking about. The two guys we have on today are near and dear to us. Tom and Brandon, both mortgage agents, brokers out in Ontario.
We discussed the difference.
Yeah. But big entrepreneur guys, they have their own couple podcasts. Like we struggle.
Yeah, they're doing good things over there at Invested Entrepreneur and the Commission Breath podcast.
Yeah. So great guys to reach out to. If you want to know about, tips and tricks just to run a business or kind of the Ontario market, definitely give them a listen to. They're pretty knowledgeable dudes.
And if you think our social media is banging, it's basically because we copy everything they do. So they're doing the research, we're reaping the rewards.
Yeah.
So,
and if you don't like ours, then tell them to change theirs and then we'll follow.
Yeah, exactly. Yeah. We'll get it somewhere down the line. But all the improvements are coming from them.
Awesome. So, well, enjoy the show. They're a couple of fun guys. Connect with them for sure.
Definitely.
Welcome to the show, Brandon and Tom. How are you guys doing?
Doing great. Thanks for having us.
Fantastic.
Is the vibe different on our show? What do you notice right away?
Well, we're just getting started. We're just opening up, so we'll see where the direction takes us.
I feel like we already had an hour-long podcast before we hit record.
Well, we like to start our show for you guys to kind of connect with our listener a little bit. What's your perfect productive Friday look like? Yeah, basically what gives you kind of energy throughout the workday leading into the weekend?
Go for it, buddy.
Yeah, so my perfect Friday, I get my daughter dropped off at school. I come back, I catch up on a couple emails. I try not to have any active files or client meetings on Fridays, just because going into the weekend, if things get delayed, it's a bit of a shit show.
Yeah.
I send my weekly realtor email and then I try to wrap things up. So right now I'm usually wrapping up kind of around like that 1:00 marker on Fridays. I was saying to Tom last week, my goal is to just completely remove Fridays for us going forward.
I love that. Is that like from any that you just want like a longer weekend, or what's the purpose of that?
I was at my chiropractor and he was like, yeah, at a certain point, I just eliminated on my Friday. And I'm like, what did you do with all the clients? He's like, I just jam them all in Monday through Thursday. And I just work like insanely hard during that stretch. Yeah. I'm like, how's it working out for you? He's like, I love it. I feel like so great for those 4 days. My brain is so focused on just work and it works so well for me. And I was like, I wonder if I could do that with mortgages. And I'm like, always telling people don't close on Fridays. Yeah. Don't do this on Fridays. I'm like, what if I just said we're closed on Fridays?
It's got 4-hour work week vibes for sure.
Yeah. I do love Timothy Ferris, but not to the level of like having everything VCs and that level, but
do you know him pretty well? I've never heard anyone call him Timothy.
I was just gonna say that. It's like his father.
Yeah.
No, we're buddies.
I usually just call him Timmy. But, yeah. What about you, Thomas?
I love it. Yeah, so pretty similar actually, because we had this conversation last week and still working on it, but I'm trying to at least start with a half day on Friday and be done at 12. And I tried to get all of my files kind of like wrapped up for the week by that point. But obviously the nature of our business, things come up. So as of right now, I'm still attempting that. But to back things up, the start of the day, what I do is Monday to Friday, I wake up at 4:45 in the morning. From there, I'll either work out. Monday, Wednesday, Friday is my workout times. If I'm not working out, I'll pound a coffee and just go work. And then I'll just work until probably 7:30 when my son wakes up, crush the rest of the day. And on Friday, if I'm done at 12 that day, go do something with the family. And then from there, I'll always finish the day with at least one drink. It's either going to be a Negroni or an old fashioned.
Nice.
I like it. It's not like most people are like, I'm always going to do something healthy. You're like, I am always going to have a drink.
Yeah. I'm healthy all week. That's my little treat to myself on the Friday, Saturday.
How'd you pick 4:45? Have you always been a morning guy?
No, never. So it started probably, I want to say 10 years ago. I transitioned to wanting to wake up earlier. And it was strictly for the fact that I wanted to just install habits in my life, like whether it was exercise, eating healthier, and just having a set routine. And then I started lowering that time. I want to say I probably started at like maybe 6:30 or something. And then this year specifically, I went from 5:30 down to 4:45, like progressively. And the reason for that is I just want to crush out more work before the day kind of gets ahead of you. And I found that once like 9:00 hits, client emails come in, you got to deal with active files. And I just found that I was way more productive getting my stuff done earlier. And another thing that was of influence to that was I do have a young boy. He's 1 year old. So he wakes up even earlier now at 6:30. So I'm trying to get everything done before he wakes up. So at least I feel a little bit productive before the day gets ahead of me.
Good for you. Yeah. I'm lucky if my son can get till 6:30.
Is he up earlier?
I'm usually up earlier too. I'm not up at 4:45, but I'm up earlier than that.
Yeah, no, his son's up at 5 and Matt gets up at 6. So lets him walk around for an hour.
The son gets him working. Boss
waking you up.
So a little bit about your guys' business. You guys are both mortgage agents from Ontario.
Mortgage broker now.
Yeah, you're speaking to a broker here.
What is the difference in Ontario? I can't follow you guys.
Oh, it's so stupid. So mortgage agent level 1 can do mortgages. Mortgage agent level 2 can do mortgages, private and alternative as well.
Right.
And then broker can manage a team.
Wow.
Basically,
Yeah.
Really?
Yeah.
Okay. Well, sorry for.
What do you have? Can you manage a team, Taylor? Can you manage a team?
Not well. In BC, we're just called brokers, or like a sub broker and a broker.
Oh, nice.
Yeah.
Yeah.
There's no agent.
I'm jealous of that, man. Like we had to do a full week course test after.
Well, hold on though.
It's not
to get your
not
license in Ontario though. You can do it in like a week, right?
Yeah. Is it different there?
It's like minimum 3 months. Both very short.
Wow. Yeah. No kidding. Like to help people with the biggest investment or purchase in their life. And you're saying like you can get the course done in 3 months on your side, even quicker for us because it's all online for the agent license. I always found that pretty nuts. And that's why you have so much turnover in the industry is because of these people that think it's like a get rich quick scheme and they enter and then they leave after a year because it's not
totally.
Is the test pretty hard in Ontario then for you guys?
The agent test was really easy. The broker test was hard because like it's all based on what the government would do. And then you're like, you've been brokering mortgages for a few years. So you're like, this is what I would actually do in this scenario. So it was just kind of like not the same.
I think the test in BC is pretty hard, eh, Taylor?
Oh, Taylor passed it.
Yeah, exactly.
Bar can't be that high.
Well, it's like a lot of courses like that. Like the theory is not that applicable to the real life.
That's like
industry.
being an agent. Also.
Read the book, you jump through the hoops, you memorize, and then you pretty much put 90% of it, back on the bookshelf, and you start to learn the real world. But in terms of like being successful in the industry, you guys have done great. You also, we've been on your podcast. That's why we wanted to bring you on ours as well. So Invested Entrepreneurs, a podcast. You guys interview people weekly, obviously entrepreneurs, mostly within Canada, a lot kind of in the real estate business. What do you find separates like successful and unsuccessful entrepreneurs? Like what can people do? What are the key takeaways that you guys see?
Obviously, everyone has a different industry and a different angle for a lot of things, but the common threads that we see a lot is that the people who are successful know what to focus on and they pour all their energy and efforts into those things and they basically ignore everything else or do it as their like fun thing to do. It's like, I'm going to do all my prospecting calls and then it's nice to have this extra layer on my business that's like a podcast or something like that, but they don't ever give up the prospecting for the fun thing.
Yeah, I would probably say the same. If I had to boil it down to two things, it's not like revolutionary what I'm about to say, but it's consistency and sticking to basics and just sounds super cheesy, but never really giving up on what you're trying to pursue, because I find that the breaking point for most entrepreneurs, they're almost like, if you look at a graph, they're probably like humming along like this. And then all of a sudden they would hit that breaking point and their business would shoot off. But a lot of people give up right before that happens. I feel like that happens with a lot of entrepreneurs, and it's the ones that just kind of believe in themselves and sticking long-term to it and not chasing that shiny object and trying multiple different things in their business. I think that's the commonalities we've seen since starting our podcast.
What made you guys switch to being entrepreneurs, or have you always been entrepreneurs? Like, was it the autonomy, the freedom, the money, the stress?
Yeah, I've always been entrepreneurial. And I think it was just like, I would try to go do something like consulting or working for a different company and like try to fit in that box and be like, I would do it this way. You're an idiot, whatever. Yeah. And just like, eventually I'm like, hey, fuck, I cannot work for someone else. I need to just work for myself. So that became pretty clear about mid-20s that I knew that that was never going to be a course I could take. So I just had to figure out something in the entrepreneurial space.
Just a terrible full-time employee. So you were forced to be self-employed.
Yeah,
I'm the same. Yeah.
Yeah, we grew up together, and it's funny because like he always had something going on. And from what I remember back in high school is he was like always the wallet man. Bacchus and Barley was this company he had started up making wallets and other those keychain holders or whatever you call them, right?
Trays. Like my buddy's dad owned like a leather company that made the back patches on jeans. So we're can you make us all these other accessories? So we had like a great manufacturer and we would just like make wallets, catch-all trays, key rings. It was a great business, but we were way too young to handle like the responsibility.
Oh, cool.
Yeah, I still got it.
Yeah. Lifetime guarantee.
That's the one you made?
I still have mine too. Passport cases, like everyone still uses it. Like they were fantastic, but like we were in Golf Digest. We got like tons of like great feedback.
What?
But then we couldn't handle it. We would get thousands of dollars in, and then we would be like, let's order so much inventory. We couldn't sell it. Like, we just had no discipline. We were just really bad business
So you did
owners
what Tom said. You kind of gave up before it really took off. You just needed to tweak a couple things.
Yeah.
Literally, there was a period where we would meet and we would like talk for half an hour, and then we would, I don't know who's listening to this, but sorry, Mom, we would smoke a joint and have a couple of beers, and then we would be like, that was a good day. It was amazing.
Sounds like a good day in your early 20s.
Yeah, I know. It was just like, if you gave me the opportunity now, I would totally do different. But that would do what it is.
I mean,
what about you, Tom? Have you always been an entrepreneur?
Yes and no. It's always been in something I realized, I'd say 3 years ago. It's always been in the back of my mind and the way I think about things, but I never really knew that up until 3 years ago, where I was always working as an employee. It took me 7-year journey to get hired on as a professional firefighter. So all I did in my life was just focus on trying to get hired as a firefighter. And for those that are listening they understand how hard it is just to get into that career. So it took me the 7 years. And then once I got on, loved the job. And, at that point, I just wanted something to keep working towards after getting on, because that was my life, the 7 years of trying to get on. So at that point, I started doing mortgages and realized quickly that like entrepreneurial endeavors and just the whole space in general was like something that really clicked for me. And then that's kind of what started off our podcast too, was both of us have always been interested in the FIRE community, financial independence, retire early. So we wanted to start a podcast, not only about that, but more specifically focusing on the FI part, so financial independence. And both of us are of that mindset. And that's kind of what brought us to starting the podcast.
That's funny, eh? Nice. Firefighter to the fire.
Yeah.
Or the firefighter to the
I knew someone was going to
take
that.
That's perfect.
With that, like, what role do you think entrepreneurs play in the Canadian economy or just in Canada in general? Like, personally, I feel entrepreneurs are like very crucial to Canadian growth and evolution on a lot of things, technology, the way businesses are run, etc. But I don't feel it's really that supported by the Canadian government. Like, I feel they would rather have everyone as like a full-time employee paying a T4 kind of tax. Yeah. What's your guys' stance on that?
Couldn't agree with you more. I think entrepreneurs are such an important part of like the overall mosaic of Canada, and like creativity, business owners, what they contribute, and like how they have society evolve. It always starts with entrepreneurship, I think. And I think largely they're shunned by the top level of society. Like, if you look at mortgage lending, for example, it's harder as an entrepreneur. Anything to do with your taxes, it's extremely difficult from the government as an entrepreneur. Anything like this makes it very difficult to be a small business owner. Once you scale and you start to grow, they're great to support you once you're big business. But when you're small business, it's quite a difficult journey. And I think that's really wrong in our society, but it creates kind of a separate microcosm where entrepreneurs are also supporting each other. Like, I don't know about you guys, but I'm like more likely to stop at the mom and pop shop or like go somewhere else because I recognize that's someone else who's paying for their kids' hockey or trying to take their trip a year kind of thing.
Totally.
So there's two sides to everything, right?
Yeah.
Yeah.
What about you, Tom? Do you got any input on that?
Yeah, I mean, I would agree with all of that. And it's just, I always look back and think like, why wasn't entrepreneurship like ever presented to me at an early age? Like, why is it never talked about? And it goes back to like, of course, like the school systems, it's always geared towards teaching people like, you got to go to college, university, pick the job that's right for you. And thinking back to like when I was in high school, I had no idea what I wanted to do. And I just wish someone told me like, hey, this is an option here that you can do. You don't have to go to college. You can figure things out before you do that. Like, not saying don't go to college or university, but hey, here's this other option. And it actually might be a better fit for you and your personality.
Yeah, it is funny. School, like, it does teach you how to be a really good employee. Like, I feel like entrepreneurship is something that people don't even, they know that you can be an entrepreneur, but they don't really understand how limitless the possibilities are. And like, you can do anything you want to do.
Yeah, exactly.
I always thought of entrepreneurship as like just the typical business owner that owns like, mom and pop shop. Like, there's so many levels to it and different types of businesses. And I never knew any of that. Yeah. Honestly, probably up until like 4 years ago. Yeah. You know what I mean? Yeah.
What's the definition of an entrepreneur? Is it just self-employed, taking Fridays off, starting a business. Like, I guess so many people
start with your day off and you work from there. That's what you do.
Like, many people can just say they're an entrepreneur, but yeah, it is kind of a loose term.
Yeah, that used to be the running joke that like we used to call ourselves when we had that leather business and stuff like that. We were kind of like, we're entrepreneurs because we like want to be entrepreneurs. But we have this business where like we're not doing much work. I think for me, defines an entrepreneur now as someone who's actually working on creating a business for themselves, and that's what they're pouring their energy and their life's focus towards.
Mm-hmm.
Yeah. And I think like Brandon said too, there's different layers to it. Like just because you're an entrepreneur doesn't mean that you have more freedom. If anything, a lot of entrepreneurs work more hours than the typical employee, but that's where the different layers come into play. Like if you're starting out your business, you're probably going to be grinding for a while until you can hire out some people and take some tasks off your plate. And to me, that's where the real magic happens, is when you buy back your time by having this system and people underneath you that can help support your business.
Yeah. Okay, well, since this is a real estate based show as well, leading into 2024, what are you guys kind of seeing in your market out east in terms of transactions, or are prices going down, up? And part two of that, kind of where do you see the market going in terms of interest rates, and just what are the transactions looking like?
So weird hearing out east.
Yeah, no,
like from like someone in Ontario, we never hear that. So if I can speak to our business specifically, January was super, super slow.
Yeah.
And February has come out kind of like out of the gates flying in terms of people reaching out, whether it's people that are looking to get an update on their pre-approval or people that have been sitting on the sidelines for a bit. We're seeing a lot more of that right now. So it definitely is heating up a little bit. Not saying it's craziness, but we're definitely seeing that now. And just speaking to like other realtors that we're partnered up with, I'm seeing more activity in the major hubs. So like GTA area and the bigger cities, but it hasn't really trickled out too much to the secondary markets. So that's what I'm seeing. And in terms of rate cuts, I still see between 0.75 to 1%. That's a bold prediction, but I'll put it out there. I'm seeing that in terms of a rate cut for 2024, but I think we won't see the first cut until mid-year now with the recent news in the US coming out. So a lot of people were predicting early spring is when we're going to see that first cut, but I think we'll probably see it maybe June.
Yeah.
I had faith that it was going to come in March, but now I'm thinking June too.
Yeah. I was always going with April, but I had that written down. Anytime someone asked me, I'm like, it's going to be in April. No crystal ball, but that's my prediction. Now I'm like, maybe a little bit after, but it's going to happen at some point. I don't think it's going back.
It is interesting how this conversation has shifted. Like obviously going up is just off the table now completely. And it's coming down. It's just a matter of time. Like when, like what month really, right? We're just waiting for these announcements to see what happens. So it's a shift that's subtle, but it's significant, so.
Mm-hmm. Are you finding like your guys' clients out there are comfortable now with where rates are? Like I feel more stressful conversations were happening 7-8 months ago when like the volatility was still there and fixed rates were pretty high. But now that fixed rates have kind of like come down substantially since then, or maybe there's just a complacency where people are like, yeah, like I'm used to a 5.5% rate now.
Yeah, I can see that too, man. I think it's just people are more comfortable with where rates are at now. And a lot of them are pleasantly surprised when we show them fixed rates too, because nobody knows that fixed rates fluctuate more rapidly and volatile versus the Bank of Canada overnight rate. So just explaining that to people and understanding that, hey, fixed rates have actually dropped over the last 1 to 2 months, and showing them, hey, we have rates in the low 5s, and some like insured were in the high 4s. So if people are more comfortable with it.
Okay, here's a tough question, but you guys probably answer it weekly. Client comes to you, insured mortgage, so owner occupied, less than $1 million, so very competitive rates. What are you putting them in if qualification isn't an issue? Meaning they could go variable, they could go 3-year fixed, 4-year, 5-year. Yeah.
So is it first-time home buyer?
Yeah, depending on the profile. First-time home buyer, I've been recommending fixed more frequently just because they get the stability of making the monthly payment. They build out their first kind of budget that way. Term-wise, I don't ever recommend past 3-year unless someone's really like, I want a 5, and then I'm like, just please take a 4. But like 3 years is kind of the sweet spot. If we're doing variable right now, it's like you have to have that conversation with them that they're going to have short-term pain and hopefully long-term gain. And some of them can wrap their head around it. If they're not getting their head around it, I'm like, hey, let's just go short-term fixed.
Yeah, variable's a tough one right now because it's so much higher than fixed. Like it's going to have to drop 2.5% over like a 3-year term compared to a 3-year fix to kind of break even on that. Whereas like, I don't want to put anyone in a 5-year, but like qualification wise, sometimes you just, depending on the lender, you kind of force your hand.
It's nice.
The 3-year?
Yeah, the 3 year is nice. It's just like,
Why wouldn't you do a 5-year? Like, what's the reasoning behind that?
Peak market right now for where rates are. So yes, you're getting a bit of a discount, but they're locked in for that long period. No flexibility there. Also, statistics show that majority of Canadians break their mortgage around the 3-year marker. So you're either setting them up to be forced to port that product or incur a penalty to break their mortgage. So I like the 3-year because, you know, that you hit that statistical marker, they get the stability of the fixed product, and then they also get kind of that sweet spot in terms of the rate cycle.
Yeah, the penalty needs to be a conversation when you're putting somebody in a 5-year fix right now. Because if rates drop, even 1.5%, depending on the lender, like interest rate differential calculation on that is going to be massive if one, they either sell or they want to break it and go to a different product or do a refi, or like there's so many scenarios that, you know, there's a huge liability there. So I do love like asking that question and hearing brokers say, yeah, like I do 3-year a lot right now, because generally brokers get paid less on a shorter term, where if a client just goes to a bank, I've never heard of a bank posing, hey, why not a 3-year? That's a great product for you, because the banks are going to make less money on that, you know? So yeah, good for you guys.
I'll give a bit of a spin to that. I'm actually okay with a 5-year fix if it's insured. I don't push it because I would agree with Brandon. I would rather them go into a shorter term. But for first-time home buyers that want that stability, they want the lowest rate, the lowest payment, like a 5-year fix, say call it 5.09% right now for the average monoline lender, pretty good. And I wouldn't be too shocked if we don't go too much lower than that in the next couple 2-3 years. So I don't think it's horrible, but I would lean towards the short-term fix. And then if it were me and my personal mortgage and I was going insured, I would definitely go with the 5-year variable. If we have that discount of 0.9% off of prime, I would definitely go with that, but I'm more risk tolerant versus like if it was a first-time home buyer, I wouldn't really recommend that.
Yeah. The 3 years a tough one with that, because you're hedging that in 3 years rates are going to be substantially cheaper than they are right now in a 5-year. So it's like, I find right now the margins, especially predicting them, are much slimmer than they were over the past couple of years. Like previous, it was so much easier to be like, oh, the 3 year is a great option. Or like a year and a half ago, a 3-year was a really good product, because in 3 years, like we're predicting that. But now it's like, well, 3 years out, are they going to be much lower? So
What about, have you guys found people just reluctant to go into a variable at all because of what happened over the last few years?
Oh yeah. There's a lot of people that either are scared of it themselves, or their parents are telling them, don't go variable. Like, look what happened to me when I renewed variable. I'm paying this amount more. So there's a lot of people like that. I always just tell those people, I'm like, you know what? Like, if that's your mindset going into this, there is a price on a good night's sleep. Just take the fixed option and don't think about your mortgage until you come up for renewal.
It does seem something satisfying about just knowing what your payments are for the next 3, 4, 5 years. Like, as long as you can make them, it just seems kind of easy to do that, especially for a first time.
Also, it depends on the lender you're with, but you have options too. Like if you want a lower rate and you're locked into a 5-year fix, if you want to latch onto a lower rate, you can do that without breaking your mortgage too. Like there's lenders like Scotia where you can go and you can do what's called a blend and extend. Say you're 2 years in and rates have dropped and you have a 5-year fix, you can go back to them and request a lower rate. And they'll blend your current rate with whatever the rate is at that point. There's pros and cons to it. You're going to extend back to a 5-year term. But if you really want that lower rate, it's an option for people to go with.
Yeah.
Is there options for people that have variables right now that are higher to switch into a fixed? What would that look like for somebody?
So we did actually quite a bit of that. Around the springtime last year, there was like a rate drop and it was pretty attractive. There was kind of stuff in the mid 4s at one point. And we were just breaking the variable. So paying a 3-month interest rate penalty and then putting them in a short-term fixed product. And for those people, it worked out because now they're in like a 3-year fixed, saved all that money because the variable hasn't come down yet. And they've recovered that penalty plus now are on the positive side of things.
You can also do that with certain lenders. If you're like not switching lenders, you can take what their fixed product is. That's also a strategy right now that people might have is, okay, if I think bond market and the fixed product is still going to go down over the next year, but I don't want a 1 year fixed and then hope that it's going to be there in a year. Take a variable, and then whenever you see rates drop what you want, then you can kind of lock into that. There's a million different ways to slice it.
Yeah, most of them aren't letting you lock in and lower your term though. So if you take the variable and you go for 1 year, you have to then lock into the 4-year option. They won't let you go and then lock into the 1 year. So there's a little bit of like gaming and nuance to it. That's why you call a broker though.
Yeah.
A mortgage broker or mortgage agent?
Either one works. Nothing changed on our day-to-day of becoming broker.
Okay, another question for you guys then. What do you find like is the most powerful tool right now if you're either just trying to get into the market or buy a rental property? Like what can people do to position themselves best, whether it's a mortgage product or...
Can we stay on 3, Brandon? I already know what you're going to say.
Yeah. Okay. We should say it on 3, but...
I test it. Okay, you got to say it on 3 then.
Yeah, test it. Yeah.
You count us in
then. You go on, go. So 3, 2, 1, go. So 3.
I'm talking.
We got to redo that.
I feel like we're on an episode of The Office here.
Yeah, it's like when I play rock, paper, scissors with my daughter. House hacking is the best.
Yeah, okay, the best can you explain that to our listener?
Yeah, for sure. So take a house you're looking at getting. Either there's a basement unit or a granny suite or something like that. You are using that rental income to qualify for the mortgage. And then that rental income also offsets your monthly payment. So it becomes a lot more palatable for your budget. And it also starts to build equity that way. So you get in your first house, you can house hack with as little as 5%. And the beauty of this is when you're ready for the next property, you can buy that next property with as little as 5% once again. Keep the house that you're currently hacking, rent out the other unit, and now you have 2 units rented out contributing to your income. So it increases your qualification once again, as well as offsets the mortgage and gives you some cash flow.
Yeah,
it's the dream. It's the real estate leverage dream to start with.
If I can go back, I would do it hands down. Like if I knew about that strategy and I didn't have a family, I would 100% do it. Too late for me now, but that's what I would do to scale. A lost cause, yeah.
Yeah, and you can't go backwards too, right? Like you can't go backwards in the eyes of the lenders too, because it's like, why are you giving up your single family home to now go live in a duplex or a triplex? Like it doesn't make sense. Or I'm looking at your income statements, times aren't that tough. So
yeah. It's kind of funny the things that you don't know, right? This is going back to entrepreneurship too. Like you just don't know what you don't know, right? So how do you fix that? You got to go talk to people. You have to read books, listen to podcasts, I wish I would have known this too when I bought my first house, because I probably would have made sure it was one with a suite or suiteable.
I think it's getting better though, like in terms of resources, because when I was in high school, I mean, I can't remember when YouTube came out, but it definitely wasn't as prevalent as it is now. Like just having YouTube or podcasting like this wasn't around, and there wasn't as many resources. Whereas I think like the younger generation, they're on these platforms, so the information is going to come at them more often than not. Versus like when we were younger, we didn't really have this.
No shit. Totally. So I had a cousin gives me a call, and he's like 20 years old, and he's asking me questions about investing in real estate. Wow. I was like, I just learned about this like 4 years ago. And here you are, like 20. Just even the fact that you're asking me these questions, just a given that you're going to be a successful kid, right? Nail right on the head there. Like there's just a lot more resources out right now, and people like us are spreading the word all the time.
Yeah.
Oh, yeah.
And like we always say this, like people turn to YouTube now instead of like watching TV, the younger kids. So like my steps always watch stuff on YouTube. Yeah. And I like the other day I was like looking for something on Netflix. I'm like, fuck this. I'm just going to watch a few YouTube videos. And I ended up watching like way more focused stuff on like real estate, entrepreneurship. Like I went down this whole rabbit hole. But I'm like, that's what they're getting. They're getting like the 5 to 10 minute pure information versus like selling Serhant or whatever, kind of selling sunset content, right? So,
are you telling me that listener is not going to understand my Office reference a few minutes ago?
Don't insult our listeners.
Well, our listeners might.
Yeah, our listeners might.
Yeah.
I was just going to go back a second there too. Like I'm kind of doing house hacking for a client right now. But you also have to work with someone that you're comfortable with and you are aligned with and you think is the right fit for you, because they went to their local bank. It's a basement suite. It's a house. Obviously, it's a house with a basement suite, but the rental income, and I know how their specific bank calculates it for the subject owner-occupied house, is not enough to qualify them for purchase price needed. But we have access to 2 lenders and specifically that use 100% of the rental income from that, less the property taxes and the heat. It was like, this is easy. We can make this work all day. So it's not that person has to go and shop around and figure out which lender has what guideline. You just find someone that you're confident with and you work with them and they'll do the hard work for you.
Yeah, that's a great point. 1/3 of the benefits of house hacking is the mortgage qualification. So you want to use that to the best of your abilities. And I think you're talking about MCAP and Strive. I'm going to drop some names because it's for the good
for you. Yeah.
So mortgage qualification, you're going to get more when you house hack versus on your own and you're just buying a straight up residence. You're going to have your mortgage pay down from someone else doing it, and your cash flow is going to be better because someone's helping you with the mortgage payment, and you're going to get into the market quicker. Because if you're debating on moving out of province, even, we're seeing a lot of people go out west to Calgary, west for us. Instead of doing that, maybe you can look in your own area and try to see if you can make it work. And that's your first step, is reach out to someone like Taylor, and he's got the options on his side for the best rental offsets and add backs.
Because it goes back to also like how long your term is and variable versus fixed and all those kinds of things.
Yeah. The other piece I love to do with the house hacking comparison is like once you do that budget and you see how much your carrying cost is, to then compare that to what it would cost you to rent that exact same unit as you're buying. Yeah. And that's the mind-blowing one. Like I helped a woman out in Sarnia area do this, and her monthly carrying cost is like $750. And the rent for that home would be like $2,200 minimum. So she was like over the moon and building equity, paying down the morgage. Love it.
And then you send her an invoice every month for like $1,500 because you're,
I actually had a client call me after a full year, and they were like, I feel really bad. I paid my lawyer. I paid my realtor the commission on the sale of my last home. I never got your bill. And like husband and I have just been feeling terrible. And like,
they thought you just forgot about it.
Yeah, it's like I just need to like, I'm clean, like let me know and I'll pay it. Like I don't know if you forgot. I'm like, I don't charge you anything. I'm paid directly by the lender. And she's like, what? I'm like, thanks for coming clean. I'm now here a whole year.
That is hilarious. That actually just happened to me as well. A client was like, hey, I'm doing my taxes and it was a rental property. I need to know how much you charged me. I was like, I didn't charge you anything.
It happens so often, man. And that's why I like
that a lot as an agent. I get asked that a lot too. Like, go talk to a mortgage broker. Like, well, it costs too much money. I'm like, no, it does not.
I open my calls with that now. I'll say like, hey, by the way, like before we proceed, I'm not charging you anything. Just a heads up. Because like you would get to the end of your phone call and the whole time they're probably thinking like, fuck, what is this guy charging me by the end of this? Yeah. So I try to get it up front now because general population still doesn't really know what mortgage brokers do. And it's not to their fault. It's just not really public knowledge.
There is private lenders you have to
so certain alternative lenders and private lenders, you have to charge a fee because they don't charge anything. But there's obviously reasons why we need to use those. So yeah, people are interested in that. We do have a podcast. I forget which episode it was, but we did have a private lender on talking about that. Yeah, that's just how they structure it. But for any kind of conventional monoline lenders, they just pay us. I'm going to lead into our kind of wrap up questions here. If you could buy any property in the Okanagan in the next 12 months, what would it be?
I'm going to go like on Okanagan Lake so I can swim with Ogopogo.
Nice.
Well, I was going to say Okanagan Lake too, but that's definitely a Whittier comment.
I have to make sure he's free that day.
Yeah. I was actually scared of that when I was a child swimming in that lake. So
there is, I think, sturgeon in Okanagan Lake, Taylor?
I haven't seen any.
I haven't seen any either. Pretty deep. I think they can go pretty deep, but I think you're safe. You'll have all your toes when you get out of the water.
My limbs are bigger now, so I think it'll be fine.
What's the best thing you guys have spent money on?
AirPods.
You wear them right now?
$200.
No, you're not.
No, but my wife hates it. I wear them all over the house all the time. Like I have YouTube Premium, so I don't go through the ads, and I'll just put it on like 1.5 or 2 times speed. And man, like the $200 investment from the AirPods, I've learned so much. I've been wearing AirPods for a while, but like the AirPods Pro, love them. Got to get those. But yeah, just biggest investment for me is just
I got to say, I love how you started that. Well, I shouldn't say I love that, but you're like, AirPods, my wife hates them. Right? Yeah, that's a great investment, buddy. I'll see you in marriage counseling.
Yeah. For me, I'm going to go like, I think the best investments usually like traveling and booking trips.
Trips to the Okanagan.
Yeah. I'm gonna come in the summer next time. I keep going in like January. Yeah. And, like always.
Yeah. Next time you guys come out here, we'll do a live recording.
Yeah.
Definitely.
What's your favorite charity, or how do you give back?
My favorite is going to be Sick Kids. Just helped out some of my family before, and so I'll donate to them annually, and then kind of whenever they're doing the LCBO collecting on them, I always toss a few extra too.
Mine is Burlington Hospice, and that's in my hometown. And Grandma always loves when we donate to it. So it's a reason for me.
Nice.
That's fantastic. How can Taylor or I or our listener help you guys out? What do you want us to do for you?
Yeah. So if you are on YouTube, as we talked about, check out The Invested Entrepreneur. That is the best place to find our shorts and to listen to our full episodes as well. Yeah. Also, anywhere that you listen to podcasts, if you look up The Invested Entrepreneur, that would be wonderful.
Right on. Do you have pants on YouTube as well, or just shorts? Sorry.
You had 2 kids.
That was a dad joke. Yeah. Dad joke.
All right. Well, it was great having you guys on the show. We'll finish on a high, and we'll see you on YouTube.
Great to be here.
Thanks, fellas.
Cheers.
Thanks for listening to the Kelowna Real Estate Podcast. Be sure to reach out and let us know how else we can add value to your Kelowna real estate journey. Please show some support by hitting the like, share, and subscribe button. This is sponsored by Matt Glenn Real Estate and Taylor at Venture Mortgages.